Tax the rich. Do the wealthy pay enough taxes? We're going to look at the income taxes in Canada today, figure out who pays what, who's paying their fair share. Let's dig into it. Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me as always, Christina Wyatt. Christina, let's talk taxes.
Oh, super excited to talk about this one, Darren. Taxes, my favorite.
I think we all can appreciate that we love paying taxes and we wish we could pay more. And let's dig into how ways we can pay more in tax.
Yeah, no, I'm going to stop you there. First, I'm going to remind everybody that if you're listening on your favorite podcast platform, please make sure you subscribe and leave that 5-star review. And if you're listening or watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on socials at Control and Compound on Instagram and TikTok.
Okay, so when we talk about taxes, Christina, I was like, we got to tax the rich. And it's just talking points, right? It's talking points that people really have no idea who pays how much tax in Canada. They have no idea what individuals pay in tax. It's just an easy throwaway line to say, oh, if the rich paid more in tax, we'd be a better place. So today I want to go through with you the sort of progressiveness of our taxes. And really, I just want to start at the basics and say, okay, how does income tax work? How is it calculated? And I encourage everyone listening, you should figure out exactly to the penny how much in income tax you're paying and at different incomes, how much you pay. It's a really neat exercise to go through. And once you understand the tax you're paying, you might be more inclined to say, holy crap, let's see if there's something I can do about it. So let's start with the federal tax. So there's two levels of taxation in Canada and income tax. You get the feds and you get provinces. The federal income tax is going to be the same for everyone across the country. So we're going to start there, and then we can talk about provincial tax that's added to that. So in Canada, we've got what's called a basic personal amount or exemption amount. So basically, federally, if you make up to $15,000 or below, you're not going to pay any tax. So there's a 0% income tax rate on the first $15,000 federally. Once you go past $15,000, the federal tax is 15%. So the income you make between 15 grand and 53 and change, you're going to pay 15%. And then once you make $1 more than that 53,359, now you bump into progressive higher income tax rate, 20.5%. And the money you make between 53 and change to 106,000 and change, you're going to pay 20.5%. Okay? And if you make $1 more than that second tier, 106,717, now you jump to 26%, and you pay 26 between 106 and 165. Then you jump to 29%. And if you go over 235,000, you're going to pay 33% tax. So anything over 235, you pay 33% tax. Well, you pay about a third, right?
Yep.
That's not bad. I mean, I don't think people making 235, they pay 33% tax would be a crazy amount. But that's just the federal. So
yeah,
we got
we're going to add the provincial to it as well.
Exactly. So now we get into provincial taxes, and they are all over the map. And each province has different tax brackets. You get provinces like Nova Scotia that refuse to index it. So when we have these inflationary times and they don't index the tax bracket, it's punishing on all the taxpayers. But if we look at sort of the provincial tax rates that we'd add to this, Alberta's real simple. Alberta, it's 10% up to $142,000. So figure out your federal, and then you get 10% provincial on whatever you make, again, minus the basic exemption. But if you look at other provinces like Ontario doesn't start at 10%. Ontario starts much lower. They're actually at 5% up to 49,000. Then they jump to 9 to about 100,000, and then they go to 11. So if you're making, 80, 100 grand, you're actually paying less tax in Ontario than you are in Alberta, which surprises some people. Right? It's pretty close, but you're paying a little less tax. And again, provinces all over the back. New Brunswick, you're going to start to 9, you're going to go to 14, you're going to be at 14% in New Brunswick when you're 9% in Ontario or 7%. So you start adding up, 7-8% differences in those provincial taxes. That's huge. That's if you make 100 grand and you're in a province where it's 7% more tax, that's an extra $7,000 you're going to pay in tax. So I thought it'd be interesting to kind of look at a sample income and say, how much tax are you going to pay on that? Okay, so what are we going to talk about first? Which income?
Okay, so the income example that we have here, and I just wanted to keep in mind we're using 2023 tax rates too. So that's the,
Right.
when we're looking and we're going through all this, things change, right?
Yeah,
So
and they're
it's good
probably
to-
going
yeah.
down quite a bit next year. So
Yeah, highly doubt that, but good to keep in mind. That's what we're looking at. So if we break down an income of 106,717, so we're moving up to that next tax bracket. That first 15,000, we're going to have that basic exemption. So we're going to pay 15, we got zero tax on the first 15,000. Then between 15 and 53, we're paying that 15%. And then between 53 and 106, we're paying 20.5. So you're not paying 20.5 on the whole amount. You're just paying the 20.5 on that, that between. So you got to take that into consideration when we're breaking these tax rates down, right?
yeah, so if you think of it, like people think taxes are complicated. Well, here's how simple the math is to figure out your federal income tax. So again, you said 0 to 15, no tax, easy. So 15 to 53 in this example, we take that amount and we multiply by 0.15. Then we add the amount between 53,000 and 106.7, and we multiply that by 0.205 or 20.5%. We add up those two taxes. That's your total income tax. You can pay an accountant a couple grand to do your taxes for you, but that's simply how you can figure it out. But again, that's just federal. We got to add provincial in there, and the provincial rates are all over the map. So let's look at an example of the first, 50,000 we have for an income?
Yes, 50,000 for the income. And it wouldn't be great if there was tax calculators out there that would help us with this. Well, we have one. That's great. So
Yeah.
we're going to bring this up here on the screen so that you can see where you can actually go and you can put your income in and you can see that pop up what it's going to be for your taxable income.
Yeah, so I'd say there's two calculators that I use all the time that I encourage anyone trying to figure out their taxes. If you look Ernst & Young average tax calculator, they have or E&Y, they have a great tax calculator. You can go in and just literally plug in your income, and it'll give you your total taxes payable, your average rate, and your marginal rate that we're going to get into. And then the other one is taxtips.ca. They have some great calculators in there that you can actually punch your income in, and it'll tell you exactly. It's a neat exercise to say, okay, if you're making 100 grand, how much tax are you going to pay? If you jump to 120, what's it going to be? If you jump to 150 or 60 or whatever your situation is, you can calculate it. But if we look at this $50,000 of income, people are surprised when we show them stuff like this, how much tax you pay, how different it is across the country. So if you earn $50,000 of income in Canada and you live in British Columbia, if we add your federal and provincial tax together, you're going to pay about $7,300 in tax. But if you live in Alberta, yeah, you're going to pay about $8,000 in tax, a little more. Ontario, only $7,207. So Ontario's lower taxes than those other two provinces. If you're lucky enough to live in Nova Scotia, you're going to pay over $10,000 in taxes. You're going to pay about $3,000 more in taxes if you live in Nova Scotia versus Ontario.
Yeah.
Ouch.
I know. We should have done this before moving. Like this should be factored in where you're going to grow up and live and raise your family, right?
But the key here I want to talk about is these next two columns: average tax and marginal tax rate. So let's take Ontario for example. We make 50 grand. The tax payable is 7207. So our after-tax income is 42,793. So you make 50 grand. You're gonna net after income tax 42,793. So your average tax rate is 14.41. What does that mean? It means if I take the total tax I paid in that example, 7207, and I divide by the 50,000 that I made, on average, I'm paying 14.41% of my money that I earn to provincial and federal income taxes. But your marginal tax rate is the key number here. And that is how much income tax would you pay on the next dollar of income earned? So this person's marginal tax rate is 24.15 in Ontario. So that means if this person got $1 raise, instead of making 50,000, generous employer gave them $1 raise, then they would pay 24.15% tax. So they'd be left with about 75, 76 cents on that. So marginal tax rate is huge. You got to figure out not just your average tax rate, that's nice to know, but the marginal tax rate is more important because that's how much you're going to pay on the next dollar of income you earn, whether that be from any source really, but we'll stick to income here to keep it simple. So let's talk about overtime, Christina.
Yeah. So individuals that are like, I'm not working a day overtime, it's going to be fully taxed. I'm not going to get that money back. So, and how you kind of just broke that down, that's not correct, right? So it doesn't go backwards when we look at these taxes. It only goes forward. So yes, you're going to pay a bit more on that income, the overtime income earned. You're going to pay it at that marginal tax rate, but it's not going to impact anything that you've made prior to it. So making more isn't going to impact what's happened previously with those progressive tax rates, right? So that statement's just not correct.
Not
really.
accurate.
Yeah, it's not accurate.
Not accurate. It's a polite way of saying it. Yeah, but think of this example. You make 50 grand and then you work overtime, you make an extra 5 grand. Well, on that $5,000, yes, you're going to pay more tax than you've paid on the first 50 because you only paid 14% on that first 50 because you paid none on the first 15, then a lower amount on this, and then it increased. But on that $5,000 of overtime you work, well, you're going to pay your marginal tax rate of 24% and change. So, yes, you're going to pay more tax as you earn more on the next dollar, but they don't go back to that first 50,000 and say, "Oh, well, he's working overtime. Let's take some of the money, he already made." No, it's just on future dollars because we have a progressive tax system. Okay, because we want to tax the rich. You work overtime, you're richer, you pay higher marginal tax rate, but there's no looking backwards.
Yeah.
Now that was a $50,000 income. Now let's try a $100,000 income because the spreads get a little bigger here depending upon what province you live. So we'll stick to the same 3 provinces. We'll use BC. You make 100 grand, you're going to pay 21,447 in tax. Ontario, you'd pay 22,128. Nova Scotia, you'd pay 28,457. So about an extra $7,000 in taxes versus BC. So PEI 27, Newfoundland 26, Northwest Territories 21, Yukon 21, and Nunavut $20,000. So the territories, low tax. We got Ontario, Alberta, relatively low tax at these levels of income. But as we go up, before we leave there, let's look at Ontario here. This person at 100 grand, their average tax rate is 26.99, but their marginal tax rate is 41%. So now we get into that progressive tax. This person making 100,000, they make another dollar, they're going to pay 41% of that, or 41 cents, to federal and provincial income taxes. So just for fun, I know this is probably not going to apply to a lot of listeners, but let's look at $1 million of income. Is someone that makes $1 million paying their fair share? Let's look at how much income tax somebody who makes $1 million. So let's pretend this is a salesman that was normally making 150 grand, and he or she just worked their butt off and did amazing thing, had some big sales. 1 year only, they're going to have this income and hopefully set them up for life. You make $1 million in 1 year, you're probably set for life, people think. Well, let's look at how much tax you're going to pay. So if you earn $1 million in Canada, roughly you're going to pay $500,000 in income tax. I want to say that again. If you earn $1 million for 1 year in Canada, half of your money will go to the federal and provincial government for income tax before you pay any other sales tax, property tax, deed transfer tax, all that stuff. So if we look at the actual numbers, Ontario, you would pay, $493,000 in tax if you earned $1 million to leave you with $506. BC, $487. Alberta, you'd pay $442,000. So the higher income tax bracket is beneficial to Alberta here. If we look at Quebec, you're paying $500,000 in income tax and you're receiving $500,000 to you. In Nova Scotia, another winner here. Nova Scotia, you're going to pay more than half of that $8 million income to federal and provincial. So $505,000. So you have 1 year at $1 million, every other year at 100 grand. You make $1 million 1 year, you're going to give $505,000 of that million to the federal and provincial government income tax, and you're left with $494,000.
But you didn't pay enough.
Didn't pay enough. Is that a fair share? Is that a fair share?
Well, yeah.
And then you look at the marginal tax rates, again, because we have that progressive tax. The more income you make, the more tax you're going to pay on that next dollar. So if we look at those marginal tax rates across the board, BC at 53, Ontario at 53.5, Nova Scotia at 54, New Brunswick at 52. Most provinces are above 50%. So now any dollar you earn over that amount, it usually starts around 240, 250, you're going to pay more than 50% tax on that next dollar. So I think it's fair to say at this income, you should be paying lots of taxes. Is 50% of your income a fair amount?
Yeah.
Well, now let's jump to the study we have, which was, we're going to take some stats from the Fraser Institute, did a study on measuring the progressiveness of taxes in Canada in 2023. And this is kind of neat, Christine. I like this. It breaks down sort of which people pay the most overall tax in Canada. So the numbers we're going to look at here are the overall income earned. So we take everyone's income in Canada and we add it up. That's the total income. And then we take all the income taxes collected by the federal and provincial governments and say, add all that up, there's the total tax. So we're going to look at, well, of that total tax paid, how much did the higher income earners pay, the middle income earners, and the lower income earners? Does that make sense?
Yeah, I think they've done a good study. We might as well use it.
All right, so where do we want to start? Let's look at what are the quintiles. This is interesting. Do you want to know if you're in the top 20%, middle 20%? This is family income range by quintile, so 20%. So if you're in the bottom 20% of income earners as a family, you're earning $59,270 or below. If you're in the second quintile, 20 to 40, 59 to 104, third quintile, 104 to 159. And if you want to be in the fourth quintile, the top 40%, you need to make more than $159,000. And if you want to be one of the wealthy top 20% income earners in Canada, you need to earn $243,000 or more. Okay, so that's kind of neat. You want to know what the top 20% of Canadian income tax earners earn? Well, it's $243,000 and above. That's going to put you in the top 20%. Okay, so do you think the top 20% pays 20% of the taxes and the bottom 20% pays 20% of the overall taxes?
No. That's not what's happening. You know, if we look at, they've actually got some charts here, and the bottom 20% of the income earning, so the 59,000 and less, they're actually estimated to only pay about 0.7% of all the federal taxes. So which
makes sense
with the income.
Right?
Yeah,
so
it does make sense.
The bottom 20%, they make 5.1% of the overall income. So if we take all those people that earn an income, add them all up, the bottom 20%, they earn about 5.1% of that overall income, but they only pay 0.7%
of everything that's coming
of
in
the overall taxes. Now, on the other extreme, what about the top 20% of income earners? So this be the people making more than 243 or above. How much of the total income? Okay, if we add up all the incomes, how much of the total income do they earn?
45%. So 45% of the income coming in is earned by that top quintile, that top 20%.
And how much of the income tax do they pay?
62%.
Yeah.
62% of that pot kind of coming in.
It's almost 2/3.
Yeah.
So those people making 243 and above in Canada, they're taking care of 2/3 of all the income tax collected. That's a lot.
That's a big share. We say, is it the fair share? That's a pretty large share. 2/3 is a large share of the income tax coming in.
So the other 80% of the income earners in Canada pay 1/3, and the top 20% pays 2/3. So again, we have a progressive tax system in Canada. The wealthy are being taxed. The wealthy are paying income tax. Then if we include that fourth quartile, so that's the people making between 159 and 243. So if we look at the fourth and fifth, so everybody in Canada making more than $159,000, they're going to be paying 21.5 plus 61.9. They're going to be paying about 84% of the overall taxes. So Canadians who make 159 grand and above, that group pays 84% of the overall taxes, and the bottom 60% of income earners would pay 16%. Those are big numbers.
Yep.
So I personally don't really see the argument when you look at stats. It's easy to say tax the rich, but they should pay more tax. But when you look at the stats and you say people making 159 grand and above are paying 84% of the total income taxes paid now in Canada, that's a big share.
Yeah, that is. When we're talking fair share, that's a large share of And when we talk about increasing taxes and whatnot, too, this study kind of goes into that and the negative impacts of doing that as well. So you're very quick to say tax the rich without actually digging into the numbers, which is why I like that we're doing this podcast so that people can take a closer look at what's being paid in taxes and where. But they had a lot of other facts on if you start increasing these taxes, what does that do for the economy, right? That is, one of the stats they had was Canada already has the 7th highest top combined personal income tax rate in the OECD. So out of 36 countries, we are the 7th highest for income tax paid. And right now we're having troubles kind of bringing in doctors, bringing in, higher income earners. And I wouldn't be surprised if the reason behind that is the fact that they're going to pay a lot more taxes over here than they are at our neighbors in the US. So why would you? And the same goes when we look at Nova Scotia, here we're struggling to get doctors and family doctors and high income earners. I would think that they're probably looking this up before they decide which province that they're going to want to move to in Canada, and it's a deciding factor. So we start increasing those, that's only going to impact in a negative way. Like the economy it'll suffer, right? So I feel that like with these numbers, it does show that the fair share is being paid, and I don't think that increasing, dramatically is going to help anybody very quickly. It's an easy cop out for them to be like, this will fix the problem, which is a typical politician route. But
yeah, and I mean, we obviously have opinions on this.
Yes,
but you can't argue with the facts.
Yeah,
the facts are people that make 159 grand and above pay 84% of the overall income tax collected federally and provincially in Canada. That's a fact. So you can argue all you want, but you can't argue the facts. The facts are the people that make more money are paying significantly more as an overall percentage of their income towards taxes, and they're paying the vast majority of the overall taxes collected. And, Christine, we can get into loopholes and stuff.
Well, yeah, I know a lot of people listening or, out there will sometimes be like, yeah, but guys, they have tax loopholes. They do things like write off business expenses. They donate to charities to lower their income. They, set up high cash value life insurance policies, as we've talked about. So yes, but when we're looking at these numbers, these are taking into account that that's already been done, right? Like the accounting's been done on what they've done for tax planning. And I encourage everybody out there to do tax planning as well. Like here's my opinion on it, not so much facts, but when we look at it, like, you can do those same things, right? Like we've got a book, Be the Bank, read the book, learn taxes, your number one wealth destroyer, figure out what you can do to help with those taxes and do that tax planning. Number two, those business owners with those business, expenses and write-offs, they're employing a lot of the Canadians out there, and that employment is contributing to the economy. So, think twice before kind of throwing them under a bus on that side of things. They have those expenses because they are employers and they're contributing to our economy and to families across the country. Donating to charities, I don't really think that's a bad thing. I don't know how they could set that up, but yeah. So I think, you got to take a step back and you got to think about it before you just throw that out there. Tax the rich is going to solve our problems. In my opinion, not so much. There's a lot of other things that we can be doing.
Yeah, and I mean, people like to cherry pick a few wealthy individuals like
Yes.
the Musk or the Bezos, and they have all these shares, and then they borrow against them, and they don't pay tax and stuff. Well, Musk paid $5 billion in taxes the other year, but yeah, in Canada, we don't have the big loopholes they have in the States. And if there's people doing the same thing in Canada, these, people that start a company and make $1 billion and borrow against it, we are talking about such a minute fraction of overall Canadian taxpayers. And that's included in the stats. That's included in the stats that say 84% of all income tax is collected in the country is paid by people making 159 grand and above.
Well, yeah, and those business owners, our corporate tax rates are the highest, right? So it's not like they're not paying their fair share either. And we can break that down in a whole nother section, but you go into it like they're getting taxed as well. So
all right, so these are the facts about how much everyone in Canada pays in taxes. We'd love your opinion on, do you think it's fair? Do you think it should be higher? Do you think it should be lower, and why? And if we increase taxes, what would the effect be? We vote increasing taxes more than we are now just simply makes us not competitive to attract and retain employees and businesses. We already see a lot of businesses now in the real estate world, a lot of investors going to the States because they can get better returns and going other places. When you increase the price of tax, that's an expense. It's going to increase the overall cost of everything. So we're not a big fan of increasing taxes. Love to hear what you guys have to say. All right, that's it. Thanks for watching. Thanks for listening. Have an awesome day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controlandcompound.com, and you can sign up for an education session with one of our wealth coaches.